Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Cybersecurity Awareness Month takes place each October and is a collaboration between government and private industry to raise awareness about digital security and empower everyone to protect their personal data from digital forms of crime. Joining me to discuss trends in the global cybersecurity industry and investment is Cameron Gleeson, Senior Investment Strategist with BetaShares. Cameron, it's great to have you with us. Welcome to Trade Talks.
Great, thanks, Jill.
What is the global investment opportunity associated with cybersecurity, and why does it have a long-term growth potential when you think about it as a sector?
Yeah, so I mean, if we think about, even thinking about this on a short-term basis, so BetaShares offers HAC, which trades on the Australian Stock Exchange, which is our BetaShares Global Security ETF, and this tracks, as you well know, the Nasdaq CTA Cybersecurity Index. On a short-term basis, we typically see with news events of serious cyber attacks globally, we actually see outperformance in the period subsequent to that of that cybersecurity index of companies that have solutions providing protections to corporates in that space. So on a short-term basis, we see that sort of trend of that reaction. But in the longer term, what's driving cybersecurity is the growth in digital data. As you know, we're moving online. Digital data globally is growing about 60% per annum. And that data has become increasingly valuable to corporates, governments, and individuals. What's obviously become an opportunity for cyber criminals is the ability to exploit that growth in data. And that's where we're seeing, corporates looking for solutions to protect themselves. There's a few avenues they can go down, for example, cyber insurance. But really what's become non-negotiable is really cybersecurity or purchasing security solutions from vendors with world-leading technology. And we can look at this in the corporate sector. We see that globally CIOs, Chief Information Officers, are prioritising cybersecurity spend. It's number one priority, number one area of increased spending. In fact, it will be a relatively resilient area of IT spending because it's becoming a non-negotiable and because the costs of not spending in that area are so much greater. On the other side, obviously, we see government spending, and we know about the increased threat from geopolitical tensions in Ukraine and Russia's role there, and what that's meant for US cybersecurity spending. But in Australia, even we've seen that our Australian Signals Director has seen a massive boost in funding. So even governments in places like Australia are increasing the spend on cybersecurity.
Cameron, what are the trends that are driving the global cybersecurity industry?
Yeah, look, I mean, I'll talk about this from Australia's perspective because it's sort of quite interesting to see how that's played out here. When we look at the news as Australians, we see these hacks that occur offshore. Recently, there was basically a shutdown of Palermo, which is the 5th largest city in Italy, with effectively ground to a standstill off the back of a cybersecurity hack of that city. And then you see, for example, the Colonial Pipeline hack, a couple of years ago, which was, hit the headlines here. But we sort of, as Australians, feel like maybe we're a small island nation, much removed from that. That's started to change in the psyche of the Australian individual, where we're seeing some state-based attacks on government institutions. A little while ago, we actually saw that our second largest brewer, Lion Nathan, actually had a shutdown of their breweries after a cyber attack. And the last thing you want to do is cut Australians off from beer. But really what's happened here, I think that's really brought to bear how important cybersecurity has been a shift from cyber criminals looking to exploit vulnerabilities of large corporates down to small to medium businesses. And one example is in the real estate sector. One of our regulators produces a Scam Watch survey at the ACCC, and they've shown an increased activity of cyber attacks of suburban real estate agents and conveyancers who are involved in property transactions. And so, effectively a cyber criminal will seek to impersonate that real estate agent and coerce a property buyer to hand over their deposit or their stamp duty, and that money just disappears. So it's really been that infiltration at the suburban level, and also, the small business operators seeing their premiums for their cybersecurity increasing. They've in fact doubled year on year for the last 3 years in Australia. And I think that's where we've started to recognise that this is a threat and it impacts everyone in our society.
And finally, how should investors be thinking about exposure to global cybersecurity in their portfolios?
Yeah, look, that's a great question. I mean, as I said, that threat has become, recognized on a local level, but where we see solutions, for cybersecurity, the opportunity set for companies that are providing those solutions, they really are global leaders, and the threat, or in effect, the product set provided, best access through a global exposure to companies providing those solutions, whether it's Palo Alto Networks, CrowdStrike, CyberArk, all these companies that provide really world-leading technologies in cloud security, end user authentication, and threat detection and mitigation software and platforms. These companies are investing heavily in this area, and they're growing share of IT spend wallet for corporates and governments. We think that the best way to play this, because it is an emerging space still, is really through a diversified approach. So I mentioned BetaShares Global Cybersecurity ETF. That's tracking an index or a portfolio of companies in this space. Now, over time, as this industry matures, there'll be certain companies that take a lead or perhaps outperform others. We think the best way to play this is to if you like, invest in the industry as a whole. And we've seen the performance of this ETF in Australian dollar terms is near 20% per annum on about 5 years of returns. Very, very resilient market downturn. So it's been a very, let's say, a fortunate investment for those who have chosen over that period, but certainly one that's been really resilient over the various periods of time. And we think that global diversified exposure that ETF provides is the right way to access this thematic.
All right, Cameron, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.